Welcome to another podcast with Investing Education Academy. As you can see, the well-lit Leon Noble, we got a light now, so we are super excited. But before we dive into Leon's new light, let's talk about what changes are coming to IAA. We're going to start covering the market a little differently than you all have seen in the past. Now, want to say thank you for everybody who's been tuning in to all of these podcasts. Thank you for asking questions and giving us someone to respond to, because honestly, we're not doing it just to talk. We talk to each other every day. We're doing it to bring information to our community, and even those that are just loosely connected to our community who maybe aren't familiar with investing or they've been thinking about investing. You've seen these courses online that are $5,000-$6,000, and you're thinking, well, I'm starting from scratch. I don't know if I'm ready for a course like that, or I don't know them. We're doing it for you all. If you go back through our podcast, there's an education far beyond what you'll pay for in a lot of classes. And, with that being said, when we first started, Leon and I said this from day one, this market is not normal. We said, do not get used to this market. It will not always be like that. However, no one knew it'd be like this. This market has never been seen in history. Like history. The inflationary numbers haven't been seen in like 40 years. I mean, everything about what's happening right now is groundbreaking. So if you are an investor, and especially if you've been an investor for like the last year and a half, you rode an extreme high and you have rode an extreme low. And that is not, no one is isolated really from that. You have people like, oh, I have this option strategy where I'm killing it. Okay. When the direction of the market changes, most of those strategies go out the window. And then you have those people like, oh, I'm trading Forex. So, I don't even care about the market. You really need to get into this Forex game. Many of them are lying. And then the ones that are not lying, you have to be dealing with a ridiculously high amount of money to truly win in Forex trading, depending on how you do it. But that's a whole nother thing. So why the change? What is the change? How does the change affect me? We're going to cover all those items today. We're going to talk. If you have questions about what we're going to say, please ask us. So let's start off with this. Leon, do you have anything to say before I dive full in?
No.
Okay. So like we said before, this market hasn't been seen in history. However, history has shown us something very important. Even with the outbreak of the Boer War, Depression, the Great Depression, let's look at this as, I don't even know what this is. The 1929 crash, Great Depression, worst crash ever. Great Depression, post-war bear market, World War I, influenza, the height of the Cold War, Cuban Missile Crisis. You get it. I don't have to go through everything. But what I do want to do is to take my arrow real quick and show you, even with this extreme negative dips, you're talking roughly 1915, 1913 to 1922. It looks horrible when you think about it. That's only 7 years. And at the end of that 7 years, over roughly a 6-year pattern, you saw the stock market spike. Like, you're talking over 1,000% rate of return. This is like the volume, the money made during that time period for those who intelligently stayed in the market turned out very well. And then if you look at this period from, let's just go to the Great Depression, through World War II, World War I, World War II, and then the post-war bear market, you're still talking about a 10, 15-year period. People are still making money during this, because if you can't really see it because the market has grown so high, but it's still ticking up. Like, this is a higher level than during the Great Depression. And then the post-war bear market is significantly higher than the Great Depression and World War II. Why does this matter? Why is that of importance? Because right now we are in an unprecedented time, and people are panicking, and they think, okay, what was pretty much a market that was printing money for the last like 2 years, depending again when you got in, that's not happening. And also you're seeing these this correction, and people are seeing corrections anywhere from 10 to 60, 70, 80%, depending on if you were heavy tech or if you were speculative. And that there's some people getting it worse than that because they were all speculative. And they thought, I'm just going to jump into all these SPACs. I'm going to invest in all these IPOs. Leon and I covered IPOs. Again, this is not something that this is not because of the market. We covered IPOs in general. When it was a good market, we were telling you to stay away from IPOs. And we explained why. Go back, check that podcast. So why are we saying all this right now? We are trying to change our members' expectation of the market. And we are reminding everyone who is not intimately familiar with the market that even when you look starting, the date is 1870. Even when you look at 1870 and you go up to 2020, this is 2020, $1 invested in 1870 is still worth almost $20,000 now. That's $1. Why is that important? Because it shows that the market has still, through all of this, trended up. Right now, it feels like the market is going to fall through the floor and we're going to lose everything. If you look at all of these scenarios, there hasn't been a long-lasting scenario where the market just began to free fall and continue to free fall. So we can only assume, backed by, unless you think the U.S. government is going to fold, that the market will correct itself even coming out of this correction. So for IEA, Leon has been, everyone in this community knows Leon's been building a software. And this software, do you want to tell him? You want me to tell him?
And primarily, I was more just talking about the Federal Reserve. What happened today? It raised interest rates again by 0.75% or 0.75% of 1%. Rates went up again. So again, your credit card, your mortgage rate, any variable rate debt that you have, it's going to increase. Right now, the rate that the Federal Reserve is raising is called the Fed funds rate. That rate now is sitting at 3.25. The reason that's important is because that rate affects just about every other rate in the economy: credit cards, mortgages, personal loans, car loans, what have you. So as that rate goes up, so are the rates of your outstanding debt. The Federal Reserve has said they want that rate, right now is 3.25, to reach 4.5 by the end of the year. So that means there's going to be 1.50. There's going to be a 1.5% rate rise through the end of the year. So again, right now the Fed funds rate is at 3.25. By the end of the year, it's going to be at 4.5, 4.5%, which means all rates are going to rise into the end of the year. Your credit card, your personal loan, if you want to look to get a mortgage, that's going to be higher by the end of the year. So all rates will continue to go up. How does that affect the stock market? As we said before, and that's what I said in the other video that probably won't see, that I saw something that I'd never seen today. And something that happened today was very unique. So I was watching a show earlier, and it's a show of investors and traders. One of the people on there, she said that she did something she's never done before today, in that she bought a 1-year treasury bill. She's never bought a treasury bill before in her life, because treasury bills typically were paying rates like what savings accounts were paying before, which was almost nothing. Well, right now, a 1-year treasury bill is paying over 4% interest. So if you put $100,000 into that, in a year you'll make $4,000 for nothing, and it's pretty much guaranteed, because again, it's backed by the federal government. The federal government's not going anywhere. So you can lock in a 4% rate right now in 1 year with a treasury yield. And the reason that's important is because that was the first time she's ever done that. Think about what other people or big businesses and hedge funds around the world are doing. They're also seeing those high rates on bonds and on treasuries, and they're putting their money into those, because remember, those are almost what they call risk-free, meaning that they're going to get back principal plus interest at the end of the term of the loan, because it's backed by the federal government, versus putting that money into some risky tech stock that may or may not go out of business, right? So a lot of money that at other times would chase stocks, right now we're chasing bonds, because the first time in like 15 years, bonds are actually competitive to stocks. You can actually get a decent return in a bond right now. That 4% yield that she's getting right now, Now that is below the current inflation, which right now is about 8.5%. But typically, typical inflation is around 2 or 3%. So she would actually typically be netting about 1% per year on her money by being in that bond, that treasury bond. And she said she's not in that bond to make the treasury bond to make money. She's in that treasury bond to fight and to basically battle off inflation. So she's not in there. She's not going to get rich off that. What she's saying is, right now the stock market is just really risky. It's really volatile. So I'll put my money over here, make this $4,000 in a year, then reassess at the end of the year. After 1 year being in that bond. So that's another reason why we're seeing this topsy-turvy stock market is because a lot of money that typically would go in the stock market is going into bonds. There's money being pulled out of bonds, put in the stock market. There's money taken out of stock market, put into bonds. Because again, bonds, you can get roughly 4% return. Some municipal bonds are paying close to 8%. Some corporate bonds are paying 7%. So there's a lot of competition right now for the stock market, for the bond market. That's why a lot of money is going there, which is causing the stock market to be very, very volatile. Last point on the Federal Reserve is that so like I said, they're going to raise probably another 1.5% at the end of the year. At that point, they said they'll probably take a pause, see what's going to happen. The problem with the issue with that is the rate that the amount that they've raised so far typically has what's called a lag. So we may not even see the effects of those rate hikes until sometime next year. And remember, the whole point of all this is to slow down the economy. So people stop taking out loans for cars, for mortgages, for credit cards. So they'll stop spending. So we'll stop pushing up prices. Problem with that is that can cause a recession. By definition, a recession is the contracting of the economy. And the way you contract the economy is you kill off demand. You make us not want to buy things. And we all know what recession can do. That can cause job losses. It's the worst thing that can happen in a recession. So that may happen next year, possibly. We don't know yet. But that's, again, going to affect the stock market. Typically, during recessions, the stock market is down about 30% in a year. Right now, the market's been down about 20-25%. So the market is pricing in a recession. If we have one, we don't know yet. But if we do get one, we may go down another 10% in the market. So we kind of find some equilibrium, and then we may start rising up as the Federal Reserve kind of pulls back. Last point on this is no time in the past has the market ever bottomed or stopped going down while the Federal Reserve is still raising rates. So what that typically means that we're not going to see a really any sort of meaningful bounce or recovery in the market until the Federal Reserve comes out and says either that they're pausing raising rates or that they're going to maybe they're going to start cutting rates. Now, they said they're not going to cut rates for at least a year. So we're talking out to 2024. But even if they come out and say, hey, we're going to pause or stop raising rates for now just to see what happens, the market will love that and we'll get some sort of rally. Don't know how big, but at least we'll stop. We should stop going down there.
So what we're going to do is we're going to start focusing more of our attention on research and also in serving our community members, giving them a different look than what they had before. You're going to see some changes. The hot seat is going to be switched up. Many of the members have expressed their interest in seeing what the bigger institutions are doing during those sessions, and we've listened. So we're going to start showing it might be from time to time we show members' portfolios, but we're going to start figuring out, like, if as much as we can, what are the Warren Buffetts of the world? What are the Jay-Z's of the world investing in? How are they investing in it? And we're going to do research to figure out, like, can we see a piece of their portfolio? What are some of these institutional funds doing? What are some of these sectors composed of? We're going to do a lot deeper dive in deconstructing what the market is, who's investing in what, and what we think makes sense versus what we think maybe doesn't. So we're going to be more direct with our members in regards to what we're looking at, what we think could be a good buy, or at least something for them to research. And we're going to not be as forward facing as we were before. So our lives are going to switch from every week to every other week. And we're going to be, our next live will be on the 5th, I believe it is, of, let me see. Yep. October the 5th will be our next live. And it's going to be every other week from here on out because we're going to be doing more research. We're going to be utilizing the software that Leon is going to be launching soon. Leon and Dave will be launching soon for the benefit of our community. So if you're an IA member, we have the advantage of being able to benefit. Some will benefit from the information that this technology is going to be delivering to us, and we're going to be going full in. Like, our community is going to be where we dump all of our information, and it's going to be much more direct in regards to how we navigate through this market. But as a whole, we're doing this because the mindset for anybody, this is for anybody watching right now, anybody listening to the podcast, your
Hey, bro,
mindset.
you take down the
Yeah. So your mindset in this market should not be, how do I win like right now? It's, how do I position myself right now to have an amazing win later? This is not the market where you just get out and wait. Well, it depends on who you are and what you need the money for. So it always depends. But by default, this should not be the market that you think, well, I'm just going to get out and just watch. I've even in this environment, someone that we know who's an investor, they decided to liquidate everything, and they just wanted to watch the market. That liquidation and sitting on the sideline kept them from having their account appreciate about $30,000. But they thought there was no way that possible they could make money in this market, but it was. It was the way the account was already structured. They would have made about $30,000, but they wanted to just look for a while, and they didn't lose it, because that's the possibility, and you got to figure out like what is important for you. So we are going to be asking members direct questions in the platform. We're going to be talking to people in a way more engaging than we were before. But for these lives and our podcast, please tune in every other week so we can give you an update on the market and give you some thoughts that we believe that you should be considering in this day and age.
Look for that. And as usual, we'll do two things, two stock picks, and those we're now posting those inside of our membership community. So anyone who's a member now, you can go to the community tomorrow, or depending on when you see this, posted Thursday, sometime Thursday. So you go to the community and see replay of this as well as our stock picks. And if you're not part of the community, you have to join the community to see those stock picks. Now we're only having those inside our membership community. You can join at IEAmembers.com. Other than that, we'll see you all. Oh, last point is that we're now doing our podcast every 2 weeks. We're not going to be doing it every week anymore. Reason being is that I think Brent talks about this in his portion. Reason being is that we're really starting to focus now on our research portion. It's where we're going to be doing a lot more research into stocks that we're going to suggest to our community. And the reason being is that this market is really unique, and it's really really something we've never seen before. So we're really kind of altering the way in which we research and pick stocks. And so we're going to be doing a lot more deeper research into the stocks that we actually pick for our community. So look for us every 2 weeks. So our next podcast will be the 5th of October. Then it'll be every 2 weeks after that. So our cadence now, instead of being every week, we'll be every 2 weeks. Inside the membership community, nothing there is going to change. Actually, you're probably seeing a bit more of our suggestions, of our stock suggestions. So you'll be seeing more picks and sectors and things that we find to be important in this market, versus just 1 or 2 every week. So you're actually probably seeing a little bit more volume in what we think, what we think should be done in this market. So that's that. This is the second time I've done this today. It's now 11:30 at night. So we're gonna get this posted to the platform and inside the Facebook group, possibly Brent's page too, but at least definitely inside the Facebook group and inside the membership platform. Hopefully Thursday, once we get all the videos together. But as usual, if you have any questions, just reach out to Brent or myself via email, via Facebook, via text, whatever, if you have any questions. That's it. And I am working on getting this mic phone thing fixed. I've been using my iPhone for the past 2 years. We've been doing this. That's not working anymore. So I need to get a new mic for our setup. So we'll be getting that in the next, hopefully by the time we record our next podcast, hopefully I'll have a mic and we'll be all set. But again, thank you, everybody. If you have any questions for us, reach out to Brent or myself. I'll see you all in 2 weeks. And inside the platform, you'll be seeing us pretty much daily. Bye, everyone.